Hey everybody, what's up? We are back doing a traditional portfolio review for the first time in about 3 months. If you check out the last video I made, it's basically just going over the updates of how I monitor my portfolio, as well as just some quick overview of things I've been doing recently. But my last real portfolio review came about 3 months ago in May, where I actually went over the stocks that I have and how I've been performing. So today we are going to do just that, go over the stocks I currently have. I'm going to give a brief overview of why I like those stocks and then just maybe talk about the returns a little bit. We'll see. But anyway, if you're interested, make sure to subscribe. I am on a road to 1,000 subscribers right now. I'm very close. Also trying to get the portfolio to 50,000 by the end of the year. So join the channel and see if I can make it. That's the goal. So anyway, let's get into it. So looking at the portfolio today, this is just my general overview page. There really isn't much change from yesterday. A big reason for that is the market really just didn't move. Also, I'm currently in a very heavy cash position, as you could see. My cash was actually upwards of 30% a couple days ago, as I've been very aggressively selling off CNC and Enphase Energy. Now, one thing I do like to highlight, which I used to do very often, is I'm not selling these stocks because of lack of confidence in them, mostly just to reduce risk in them. The more money you have in something, the more risk you have. So, saying that, let's just get into each of these positions. So, CNC is probably the first large trade I did that was not covered at all on the channel. If you look, there are still some familiar faces here with Lulu and Snapchat still being in the portfolio. These are actually completely different positions from May when I also held those stocks. I sold them, bought them again, sold them again since then, and I've really just been swinging them as they continue to move up and down. So, starting off with CNC, I bought them a couple days after their big drop about a month, maybe a month and a half ago, and have been holding them since then. I've averaged down very aggressively, which is why I was saying I was selling very actively recently as well. I've kind of found a good balance right around 5,000 or 175 shares where I don't feel over risked in the stock, but I still feel like it's enough to where I could really capitalize on the upside potential there. So I do believe there is a ton of upside potential with CNC. The PE is very, very low right now. Fundamentals are extremely strong. They have a ton of cash, a ton of operational efficiency that we're seeing. And I think 2026 is going to be massive for them. Now, will I hold this many shares that long? Probably not. I'm probably going to sell down to about 50 shares and then move that into my long term section, which we'll get into in a little bit. But basically, just to give a quick summary, I am notorious for selling things way too early. You can look at Super Microcomputer. You could look at Trade Desk, which I recently bought back. Um, Covered these a long time ago, but Dollar General, Celsius, Robinhood, notorious for selling things early. So I'm really just trying to prevent that by holding smaller positions, but basically just not selling them, which is what this group is right here. They're all in the same portfolio. They're all using the same money, but I just organized it a little bit differently on here to visualize for myself which ones I'm not selling. It just makes it easier for me. So moving on, Enphase Energy. If you look at their stock chart, which I don't really feel like bringing up right now, um, very, very low. The solar sector has seen a pretty significant rebound, and Enphase really hasn't seen too much of it recently. Obviously, I am up 12% with a fairly decent profit at the moment. I did also sell off a lot of that. I had about 6,000 worth of Enphase at one point, and I've sold off a pretty big chunk of that, which is great. But I took a big bunch of profits, and now I'm holding this as well. I don't think Enphase will get moved to the long term section once I'm done selling it off, but that's just how it is. But basically, they are one of the few solar companies that are actually showing a little bit of profit and margin improvement. And while they did take a big sales hit in the last like year and a half or so, I think that's going to rebound with interest rates dropping, which we are seeing they're going to very soon. And I think it's just very positive. There's a lot of positive catalysts coming up for them. And also just solar is most likely the future. Let's all be honest with ourselves. So that's another big plus. Lulu will again also not be added to the long-term portfolio, most likely, but they have been getting swung by me for basically all of 2025. I got them pretty early this year for about 40%, bought them again about 2 months ago for another like 10-15% trade. And now I'm in Lulu again. They dropped significantly below $200 a share, and now they are back above it. I bought in at 197 and a half, which I think is an excellent price for them. I'm expecting them to probably get to the 220-ish range fairly soon. But anyway, another one that's looking very promising. I don't want to say they're necessarily undervalued, but I think they are going to most likely go back up is the best way to put it. I'll get into charts specifically probably later on this week, but today I just kind of feel like going over my justifications for my positions first, and then maybe I'll get into charts a little more. But anyway, Duolingo I just bought a couple days ago. They reported earnings and went from I think 300 upper $300 a share to like $460 a share in one day. Um, After that, they essentially lost all of their gains and a little bit more over the next 2 or 3 weeks. I think they're going to head back up towards that $400 range very soon. Um, that kind of buying action just doesn't really happen without a good reason for it. So I think it's getting sold off just because of the type of company it is. And I think it's going to be bought back up once people kind of settle in and the volatility dies down. So that's kind of the justification there. I am down slightly. I did buy 2 more shares, I think, today. Don't quote me on that. And obviously, you have no way to prove it, but I'm pretty sure I just bought 2 more shares today. Snapchat is another one I have been holding and trading for basically a year now. Looks excellent at the current price. I bought it back when it was at like $12 a share, swung it for a profit. I bought it at $9 or $10 a share, swung it for another profit, and I'm buying it again at $7 a share, and I'm expecting to swing this for probably my biggest profit yet. I'm honestly expecting 40-50% on this, possibly more, but Snapchat is not really going anywhere. They have a huge user base. They're growing very quickly, at least in my opinion. And I think the longer they are establishing themselves, the more monetizable their concept will be. And I think they're just going to see way more margin improvement, way more profits from that. They're dipping into hardware in the near future. And I think that's going to be another wave of growth. That people aren't really realizing yet because there are risks that come with it. But in my opinion, it's going to be pretty solid. At the prices they're at now, I don't think you can lose. Worst case scenario, in my opinion, they get bought out, maybe by Google, maybe by Meta, although there'd probably be problems with both of those. But in that case, you're going to see a premium no matter what. They'll probably get bought out for $10, $12 a share. But if not, I still think the company is going to do well. But anyway, moving on. Gartner, or the ticker IT, they are just at a fantastic price. They showed up when I was screening for stocks the other day. Growth looks fantastic. Margins look fantastic. Profit looks good. Um, don't really understand fully why they dropped so much. Basically, it was lessened growth expectations, if I'm recalling correctly, but I think they're at a great price, expecting it to go significantly higher, maybe towards 260. This is kind of one of those classic 10 percenters where I'm probably going to sell off once I hit 10%, but definitely potential to go a lot higher than that. Might hold, well, I only have a couple shares, but I might hold 1 or 2 long term, but honestly, it's not really worth doing that for the most part. But anyway, I still think it's going to be an easy swing. And then finally, my newest stock, actually Duolingo might be, I don't remember, but just bought Fresh Pet as well. Again, fantastic price at the moment. They are in a position financially where they're doing very well. Their growth is phenomenal. And I just don't really see why it dropped as much as it did. It's just one of those classic oversold moments off an earnings report. If you look at Roku very recently, they had a similar situation where they had a report. They did very well in that report and got annihilated for it. And that tends to happen all the time um, in recent stock market events. But I'm almost always a buyer in those situations. Unfortunately, I didn't buy Roku, but one of my friends did, and he has done very well on it, and I'm very jealous. But didn't have the cash because I was stuck in CNC and Enphase at the time. But either way, still a solid trade, still a good example. So now long terms. I have the notes here already. If you want to read through those, you can. But basically, with all of those, small position, high potential, in my opinion, low risk. And that's about all I got. So saying that, that's basically all I wanted to go through. I probably talked for a lot longer than I wanted to, but yeah, that's about it. So thanks for watching. Make sure to subscribe if you haven't. I'm going to try to be making these videos more often. But anyways, see you next time.